Here's a summary of Bank of America's BAC 2025 Q4 earnings call, designed for clear and concise delivery. Introduction. Good morning, and thank you for joining Bank of America's fourth quarter 2025 earnings call. Today, we'll be discussing our results based on recast numbers following an accounting change related to tax-related equity investments. This change had an insignificant impact on net income, primarily reclassifying items on our income statement. Key financial metrics and highlights. Bank of America reported net income of $7.6 billion for the fourth quarter of 2025, an 18% increase in earnings per share to 98 cents. We achieved 7% year-over-year revenue growth, notably driven by a 10% increase in net interest income, NI, to $15.9 billion. For the full year 2025, we delivered revenue of over $113 billion, a 7% increase year-over-year. We generated 250 basis points of operating leverage for the year, showcasing disciplined expense management. Asset quality remained strong, with net charge-offs improving from 2024. Full-year net income grew 13%, and EPS increased 19% to $3.81. Our profitability saw a significant improvement, with return on tangible common equity up 128 basis points and return on assets reaching 89 basis points. We continued robust growth across our business segments. Consumer checking accounts saw 680,000 net new accounts for the year, extending a 7-year streak of net growth. Client balances across wealth and consumer banking exceeded $6.5 trillion. In global banking, average deposits grew 13%, and treasury service fees increased 13%. Investment banking fees reached their highest level since 2020, up 7% year-over-year, with strong momentum in the second half of the year. Global markets delivered a record year with nearly $21 billion in sales and trading revenue, marking its 15th consecutive quarter of improvement. Consumer spending grew 5% for the year, and consumer credit quality improved. Our outlook for the economy in 2026 is constructive, with global GDP growth projected at 3.4% and U.S. GDP at 2.6%. Lowlights and risk factors. While we are encouraged by our performance, risks remain. These include broader economic uncertainties, though we remain constructive on the year ahead. Geopolitical risks are also a constant consideration. Management's forecasts for future quarters. Looking ahead to 2026, we expect 5% to 7% growth in net interest income compared to 2025, based on the current interest rate curve that includes 2 rate cuts. We anticipate this growth will be driven by loan and deposit expansion, coupled with significant repricing of fixed assets and cash flow swaps. For Q1 2026, we expect NI to grow roughly 7% from Q1 2025, in line with our full-year guidance. We aim to generate about 200 basis points of operating leverage in 2026. This includes a constructive fee environment complementing our NI growth, with continued momentum expected in asset management, investment banking, and sales and trading. Regarding expenses, we anticipate Q1 2026 expenses to be about 4% higher than Q1 2025, due to seasonal factors like elevated payroll taxes and the absence of the Q4 FDIC benefit, partially offset by ongoing productivity improvements. Despite this, we still expect to deliver operating leverage in Q1. Our medium-term target for the efficiency ratio remains between 55% and 59%, and we are committed to driving this lower over time. CEO and CFO statements. Brian Moynihan, CEO. This fourth quarter capped off a strong performance by our teammates at Bank of America for 2025. We delivered on our commitments to shareholders across the year with solid growth across revenue, earnings, and returns. Our diversified business model and commitment to responsible growth were key. We grew client balances faster than the industry, highlighting the power of our integrated franchise. The health of the U.S. consumer bodes well for continued improvement in 2026. While risks remain, we are encouraged and constructive on the year ahead. Alistair Borthwick, CFO. The fourth quarter was strong, with 7% year-over-year revenue growth and good operating leverage. Net interest income was better than expected, complemented by market-based fees. We've shown expense discipline, holding headcount flat despite volume growth, with productivity improvements from AI and digitalization helping to offset investments. Asset quality remains sound, with declining provisions and net charge-offs. Our balance sheet is strong, and we returned over $8.4 billion in capital to shareholders in the quarter. We are focused on continuing to deliver operating leverage and drive profitability for our shareholders. Important details on specific areas: deposits. Average deposits grew 3% year-over-year, with commercial client activity being a key driver. Mobile banking saw significant deposit growth. Pricing discipline on deposits led to a decline in the overall rate paid. Loans. Average loans improved 8% year-over-year, led by 12% commercial loan growth. Consumer loans grew at a slower 4% pace. Every business segment recorded higher average loans year-over-year. Net interest income, NII growth was driven by core performance from loan and deposit growth, asset repricing, and shifts in global markets activity. Net interest yield improved. Expenses. Expense growth was primarily driven by incentives tied to revenue and higher brokerage clearing costs, largely reimbursed by clients. Productivity improvements from AI and digitalization are helping to offset investments and wage increases. Headcount has been managed closely and held flat. Credit quality. Asset quality remains sound, with improvements in consumer credit. Net charge-offs and provisions were low, and we expect continued stability. Technology and AI. Bank of America is investing significantly in technology and AI, with initiatives like the 365 Copilot rollout across 200,000 teammates. AI techniques have already shown significant efficiency gains in coding. Thank you for your time and attention. We look forward to speaking with you next quarter.